Hello and welcome back to, let's see if I can do this right, uh, Terry's Trading Tips. Terry's Trading Tips. So today I wanted to talk about different terminology on the stock market. So when you get into trading, you might see a lot of different words. And I've got a little list here and some of the things that might confuse you. First of all, bottom. When I say bottom, what do you think I mean? Well, what a bottom is it's the bottom of the market. Always try and buy at the bottom and sell at the top. That's next, sorry, top. When is the top of the market? That's when you want to sell. Um, Unfortunately, a lot of people have something called FOMO. FOMO means fear of missing out. And when they see the bottom going to the top, they want to get on the top so they can get even further up the top so they can sell even more money. But usually they just end up on the bottom and they get totally screwed. Bear. What's a bear market? It's not full of like grizzly bears that are all hairy that come into the stock market and start killing and eating everybody, although it might as well be. It's when loads of stock traders get a bit scared of a bear and they run away. Bull market, a bull. What's a bull? Well, a bull is something that charges forward, like this graph behind me. It's charging forward, like Nikola stock did yesterday. That was a bull market, 103% in a day. That's mental. IPO, that is initial. I don't even initial purchase. Don't know. IPO basically don't know what it stands for, but it is when a privately traded company wants to make more money, so they put their company onto the public stock market so people can buy the shares, and then they basically get money out of that. It's basically a way to raise money for capital, to invest in things, and also for the initial investors in the company to get very, very, very rich, and also gives you the opportunity of perhaps getting some of that wealth as well. But usually that it doesn't always work out. I'd say don't invest at IPO points. Wait until you've seen how good a company is and whether it's going to grow over time. Forex. I don't really do forex trading. I think that's to do with buying and selling currencies. It's all very dodgy. And there's also another type of trading called options. I don't even try and understand that. It's like you can like lose a lot of money in one day. I just stick to your simple basic stocks. You know, the bottoms, getting in at the bottom, and then getting out at the top. Simple, clean, easy. Short sellers. This is maybe seen as the dark side of trading, but to be honest, it's actually pretty good way of making money quite quickly, and also a pretty good way of losing a lot of money really quickly. But basically, what that means is you're not buying into a company long term, but you're buying into a company and then you're selling out, like as soon as you've seen a little bit of profit. Whereas a lot of people like a very famous investor, Warren Buffett, he buys in a company like Coca-Cola and leaves it there all his life, and then like £1 million becomes like 100 billion pounds. Well, that's fine if you start off with £1 million and you've got 35 years, but maybe you just want to make a little bit of money so you can have a bit of a better life right now. So maybe you do want to be a short seller, but you've got to be careful and do your research. But that's why you're here, because I'm going to give you a shortcut to making money through Terry's Trading Tips, or Terry's Trading Tips. Thank you. See you again next time.